Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Hope you're having a good day. Welcome to our show. It's called The Closing Beat, quick stock market update show, and I hope you enjoy. We're financial advisors here at Jazz Wealth. Hope you'll check us out at jazzwealth.com. And before we get into the markets, got a little housekeeping. Just want to show you this here real quick. If I go over to the screen, if you're one of our customers and you log into the dojo, you've got a new button up here where you can actually schedule a call with us. If you have a client-related question or technical support, whatever you need, you can now do it inside the dojo. The dates and times and stuff are being adjusted as we speak, but yeah, you got that new feature in there. And then just a sneak peek, this was our worst idea ever, which I think is going to be our best idea. We're building out our own client portal where you can see your performance, and we can do all kinds of geeky stuff in there. So I'll go over to that and show you what we have working on right now, just as far as like a test, right? This is all in testing phase, is not currently happening, but currently what you got is your account performance will be over here. We've got all kinds of data. That's not really what I want to share today. You've got your charts and the performance of all your different accounts, whatever they may be, and of course you can zoom in and out and all that. But what I want to show you is down here, this is a feature where we're actually going to be letting the customer see what the advisor has said about them. No other advisor's doing this, I promise. This is just not happening. So for example, if we had a phone call and I left some notes about you, now you'll be able to go in there and see what notes did I leave for you. And if you agree or disagree or something's changed in your life, you'll be able to contact me directly if I'm working with you. And so one feature we're adding in there right now, we're testing it out. I know it's probably a bad idea, but what if you could see every note that we ever left about you, what we think, this man's crazy. He thinks he's going to retire in 2 years. He can't do it. So we've got that going on in there. Just wanted to share that with you so that you can kind of see some of the updates. We've got other things in there that we're working on, putting in all your recent transactions, dividends and things, the recent classes that we have. But this is kind of everything coming together. We did a class on this to highlight this with customers. So I just wanted to point that out. You can go over here in the dojo. That's active now. All of this is in the testing mode here, and we're going through that. So hope you enjoy it. That will be my homework for the day. I'll probably tease that a couple more times just to show the progress that we're making, because super excited about that. Anyways, on to the markets today. Let's take a look. You got a slight down day besides the Russell 2000. We'll cover that here in just a second, but the markets were mostly higher throughout the day, and then the Fed came out with their minutes and said, we're really concerned that the virus is going to weigh heavily on the stock market. Those were their words, not mine. I should say they said they were going to weigh heavily on the economy. That's probably how I should say it there. And since then, it came out, 2 o'clock today, the market started taking a hit, and we're unable to recover for that from the day there. We take a look at some of the different indices here today. We'll start with the S&P 500, kind of a mixed day overall. Consumer staples were one of the weaker areas on the day. The S&P sitting at those record all-time highs, and just hinting at, needing something to get it to go further. We've set a milestone. Everything's exciting. What are we going to do to move further? Well, it doesn't help when the Fed says they have just for today as well. In the sector, in there, we'll cover the sectors, but consumer staples, one weak area. You had names like Walmart in the S&P continue to pull back. I think it's a good pullback. It just continues to pull back there. Procter & Gamble, Coke, and Pepsi, they were all sort of weak on the day. That didn't help the old S&P get anything done throughout the day, but we'll cover that in our sector breakdown here. Looking over at the Russell 2000, this was okay right through most of the day. It was actually the strongest area of the market. Actually finished the day as the strongest index out of the group. Your small caps continue to perform really well. If you're looking at something like the ETF, you're hoping for it to pull back. It's trying to work on that. A couple things in the Russell 2000. You had Manta, or Momentum is how you say it, but Manta is the ticker symbol. They're getting bought out by Johnson & Johnson. That made healthcare the most important sector of the Russell 2000 today in terms of performance. They were the biggest contributor to the Russell's gains there. We'll go over to the NASDAQ. Take a look here. Very popular index. It pulled back today. It was your weakest index out of the day today. Still up 30% year to date, so still good, but biotech was the drag there. If you're looking at the different sectors, BioMarin, obviously just a horrible day for them, down 35% on the day. Gilead Sciences, they also sold off on the day and continue to sell off since having all that excitement around the virus. And Biogen was another one of those NASDAQ stocks that weighed on the index today, down 3% overall. Hey, we've got some FinTips videos for you this week. Large cap dividend stocks that paid dividends and volatility considerations. If you want to look at our FinTips video, today we had a video, a retirement plan for a 54-year-old that was actually had some money, actually doing good, saved up money, what sort of plan they would need to do. And on Friday, we're going to do the 4 tips for small business owners in terms of retirement. Our Wine and Wealth tomorrow, which will actually be sporting a new wine, thanks to our customer, Dr. Mike, sent us a nice little white wine. We'll test this out on the Wine and Wealth class tomorrow. We do that every Thursday for our customers, and join you over in the speakeasy. Last week we did it open house. You can go back on our YouTube channel and see what a Wine and Wealth looks like. We did one open for the public, but this week we're going to cover warrants. A lot of our customers were awarded warrants for an individual stock position. We're going to cover what that means, how we're going to handle it, what sort of benefits there are, any drawbacks as well. So we'll cover that there. Also, check out our research section, by the way, if I could hop over there real quick, some really cool posts that we've got going up. You can go into the research section if you're one of our customers. Also, if you just want to join us, $13.99 a month, if you want to participate in learning how we research some of this stuff and seeing how we come up with different ideas. Got a housing market post in there and a cool one yesterday. Research that you can actually track as well regarding the airline stock. So we kind of showed you how to do it rather than just do it for you, teach you how to fish, right? That's the old saying anyways. As far as your 401ks, I do want to point something out if I could real quick. In your 401ks, small cap is where it's at. Here's over the last month. It might be a little blurry. Sorry about that. In the small caps there, outperforming every other mutual fund that you have in your 401ks, even the growth funds and things like that. Here's your small cap value. You got small cap index and small cap growth in there, all beating the other ones like mid cap and large cap, things like that. If you were to look over year to date, there's no arguing it, right? I mean, just really, really good there. The growth stock, large cap growth is just killing it. But in second place there, you've got your small cap growth in the mix as well. So looking good there. Small cap really starting to wake up. If you notice that in your 401k, that is what's going on. Hey, let's go over to the sector breakdown today because I got a really cool watch list to share with you here today. So I want to get to that. Go over to the sector breakdown. Let's take a look. You got tech in the mix there. You got tech. What did we do wrong? I think I froze here for a second. Yep, there we go. You can look at the sector breakdown on the right-hand side of the screen as well as we post that. Technology a little bit weak today. We need that to move us higher. We haven't had it. That's sort of the hot sauce that's been moving the markets higher. It just wasn't there today. Apple was in the news. They hit $1 trillion or $2 trillion. We're just throwing around trillions. We gave you the stats on this yesterday, 467.77. They hit that today, and that gives them $2 trillion. They were the biggest contributor in performance today in terms of holding up the tech sector. Oracle, a little bit higher again today. That's on the TikTok excitement there. It's a long shot. We covered that yesterday. Visa in the mix there as well. That's that breakout we've been talking about, reversing course, getting back up to those highs. Looking pretty good there if you're looking at that stock or have been watching it with us. Broadcom also consolidating up near those highs. Kind of a flat day today. Nothing too exciting to write home about, but one of those semiconductor stocks that's just hinting that it's got something to do for you. Financials, which we're going to dig in today in our really cool watch list update today. But it was oversold over the last couple days. Got a little tiny bounce there throughout the day. And as we saw, at one point it was the leading sector, but as we saw the Fed come out with their news there, it was all erased. So maybe another day for financials. Communication services sitting very close to all-time highs there. More than half of the gains, when there were gains in communication services today, came from Facebook. Also want to point out Twitter. Same thing. This one showing relative strength against the overall markets today, but sitting up at these highs, looking pretty good. Like Twitter's really ready to do something, and we'll see what happens, but today was a good day for that one. And CenturyLink, back to the 200-day moving average. That one's been waking up. It's been on a few of our watch lists there, so that was one I wanted to point out in that space. Real estate. Real estate was one of the weaker spots. We talked about this one sort of faking the break above the 200-day. That is coming true there. We commented on this one yesterday to give you a little more on it. But even the leaders in the space took the day off. So some of the names we've been talking a lot about, Prologis, American Tower, AMT is a ticker symbol. That pulled back on the day. Digital Realty also pulling back on the day as well. So even the leaders in this space were weak. It was not something that you did wrong today if you happen to own some of them. Healthcare continuing to hint at that breakout, though nothing yet. Right, so just hinting there, that's the next sector that's looking for this sort of, I would say, next wave higher there, provided that the insurers can get something done. And, we'll see what happens there. Let's go on over to the new highs, new lows for the day, because we've got a couple things to talk about there. There were 26 new highs on the day there. The exchanges, remember yesterday I said the exchanges are really standing out. And more than just say that, I'm going to cover that in a watch list section here in just a second to highlight this. But for now, you got S&P Global hitting new 52-week highs today. It did pull back with the market, so nothing special there. Intercontinental Exchange also hitting new highs, but extended. You want that to pull back. You like the idea that this is a strong stock. It's just a matter of finding a better entry point. Nike we covered yesterday at the possible breakout, and today it did. So a little tiny breakout there, but got going today, 1.7% higher. Can't complain about that. I'll look at Danaher real quick, the fourth one on our list, sitting up there at those highs. I thought that was interesting because it's hinting at the same breakout as well, although no relative strength today, so not as exciting as it could have been. And Allergan. They reported earnings, gapped down on earnings, reversed all of it, and came back into the middle of the range here as if nothing happened. That's a good sign. That's actually a bullish sign for the stock going forward. Need a little support from the markets. You need a little support from the sector, of course. But hey, we'll see what happens there. All right. Let's move on over to our watch list for the day, because this is going to be something you've never seen somebody do before. Also going to share this part on a research site as well, just in case anybody missed it. But here's what we're looking at. Hope you're ready. Here's what we did. I talk about the financials all the time, and I say, that right now it's a stock picking sector, right? And so what that means is there are different industries inside of the financials that are doing better than others. What I did is I highlighted those. I took the entire financial sector and I categorized them by industry. So you got the index. We go down to the sector, which is financials, and one step further is to go on to the individual industries. Also labeled them here for you, but for example, asset management. These would be your fund managers. These would be your retirement companies. Think companies like us, but just a tiny bit bigger. You've got Ameriprise. You recognize some of the names, Invesco, and whatever. Going through the list here, we've got the banks, the big banks anyways, Bank of America, Wells Fargo and stuff. We've got regional banks. These are all your sort of, not your global banks, not your sort of national banks, just the regional banks there. You probably recognize a lot of those. Going down through the list here, you got any company exposed to the capital markets, whether it's through software or whether it's through lending, things like that. Goldman Sachs, Charles Schwab, E-Trade, you recognize, Market Access, the bond platform there. So you see those names. You've got credit. These are any companies that issue or handle credit. So Visa, MasterCard, things like that. You probably recognize Discover, Capital One, American Express. You know the names. Moving on here, the exchanges. So I've been saying that the exchanges have been the better performers. Here's a list of all of them there. What we're going to do today is see if that's in fact even true, right? Maybe I'm wrong, so we're going to take a look at that. And then at the bottom, the biggest group is the insurers. These are the guys that have been pulling back just a little bit on a broad scope there, but otherwise lately doing pretty good. Here's what we did. Took all of these together, and we said let's break them down by industry and track their performance year to date and over the last month. So we go over to that. Here you go. You got asset management, banks, regionals, everything I just listed off for you. The red is their year-to-date performance. You can see that the banks, not as good. The banks took it the worst, down an average of 36%, which you can verify by going back over here and just taking all the year-to-date the average year-to-date returns. I put them over here for you, just off to the right if you happen to be able to see that there. Minus 36.3%. So we go over to the chart. We see that's our worst performing area over the last month, up 3.4%. Not too bad. Regional banks also hit hard, 30% down, 7%. That's actually really good, right? The reason I say the exchanges are doing so well, and I miscolor-coded this one, that's my fault. The exchanges are up 12% for the year, and they're showing strength here over the last month. Not a lot. You can't say it's the best performing industry out of the group, by no means, but you certainly see why I'm saying that's where the strength's at. They're already up. They're already doing well. Everybody's looking at them. People are sitting at home trading, so these exchanges are making more, and that is continuing to go further and further. You could also argue that your credit space and your regional banks are an interesting area, at least over the last month. Maybe they're starting to pick up some steam. Now, to take it a step further, as I like to do and not sleep, we went through and said, okay, now let's find some stocks. How do we tell which stocks in this big old list of stocks might be interesting? Well, on the far hand right side there, what I did is I showed you the best performer over the last month that is also the least extended. All right, so meaning it hasn't already taken off without you. And a great example would be PayPal, which would not have made the list here. So if I go through PayPal, up 12.9% over the last month, but it's one of the most extended stocks out there. What's that mean? What am I trying to highlight there for you? Let's go over and look at PayPal and just see if by chance it's extended. PayPal, come on, buddy. There we go. So PayPal, even though today has pulled back a little bit, best performer over the last month, but on a monthly basis, it's more extended than the others. I'll go and look at something else here like NTRE, there we go, Northern Trust, NTRS. And you can see that this one's had good performance over the last month, but not very extended, meaning there's still some meat on the bone possibly if you think that's a good pick. So if we look through each one of the industries here, we've got Northern Trust, I just mentioned, up 6% over the last month and not very extended. Still a beaten down stock, so I'm not saying it's a good stock. It just happens to fit the criteria that we're looking for. Bank of America up 11%, but not very extended, only 4% there, so not too bad. Looking through here, M&T Bank, MTB, up 7%, but not extended. Probably means it's gone sideways a little bit in the sort of last week or so. If you look at Regions, up 13%, same thing. You get the picture that I'm pointing here. I'm trying to go slow in case you want to screenshot some of these and keep them for you. But that's how you take a index, look at the sectors like we do every single day, and we just did. Then you go inside of it and say, is it okay to buy the whole sector here, or should I be focused on an individual industry inside the group? By breaking out the performance, you're able to see, wow, that's clearly the leader, right? Even though the color's wrong and Dustin messed up, that's clearly the leader there. We've got some hope in the regional banks there, little hope in the credit space there. I'd probably say this comes in second place because it's not down as much, right? And showing the greatest amount of recovery. But you now know, wow, it just doesn't make sense to be over here in these banks. They've been beaten down and they've only recovered a tenth of what they've been beaten down. That's not too cool. I don't like that. So that's kind of how I wanted to help you go through that. A little bit more than we normally do here, but like I said, wanted to share that with you. Also going to post this on the research site just in case somebody missed it, because I think this is super, super cool. Let me know what you think in the comments below. Okay, where was I? Going on to stocks in the news. So we're going to look at some of the stocks today, and then I'll take your questions. If you have any questions, feel free to start posting the questions now, and we'll dig through them and see what ones we can post, and don't say mean things about me. So go ahead and do that if you have a question. I'll answer a few of them today, and then we'll help you out. You got Lowe's reporting earnings. Awesome earnings. Earnings just came out 80 cents better than expected. Revenues came in better than expected. They withdrew their guidance, though. In an earnings cycle where guidance is the focus, for them to take away guidance, that's the major negative there for them. 100% the major negative. But otherwise, great earnings there, nothing to complain about if you own Lowe's. You got Cree. So Cree, obviously big, quick, sharp discount there. It's going to be on earnings there. They beat on earnings by a penny. They did lower their guidance going forward. That's going to lower the stock given what we now know about this earnings season and guidance being so important. Tried to go outside the box and choose a couple different names for you here. You got Lazy Boy. So Lazy Boy came out today. They beat by 31 cents. Sales were a little weaker than expected, but they brought back the dividend, 7-cent dividend that they're paying on this stock here if you're interested in that one. Got to talk about Target. Target, best earnings ever. Stock up 13% there. Killed it. All-time highs here. You cannot complain about their earnings at all. Sales growth 24.3%, which is their best ever in history. They've never had that quarter-over-quarter growth there. Digital sales up 200%. Awesome. And you say, well, okay, Dustin, I see what's going on here. They were not closed during the virus shutdown, and so therefore they had more demand than they normally would, so that could be a problem. Not for Target. Their profit margins also up, I believe 3.4%, something like that. So it means that whatever demand they were able to bring in, they were able to make more of a profit on it. You usually see when there's more demand, profit margins come down. Did not see that there with Target. So really, really good for them. And lastly, Goodyear Tire, a little volatile today, down 1.33% on the day. Trump tweeted out, hey, I don't like what they're saying to their employees. They don't want them wearing the Make America Great hats. And so Trump said, go ahead and boycott Goodyear tires. That's the reason for your volatility there, if you happen to be looking at that stock or you happen to own it. All right, let's take some questions here. If you have any questions, let me know. We'll go through those in a second. Alibaba reports earnings tomorrow. Estee Lauder reports earnings tomorrow. And Ross Stores will report. Sherwin-Williams paying out $1.34 in terms of dividends. Got Hershey paying out 80 cents, Microchip paying out 37 cents, and WD Brands 36 cents. And remember, Pinduoduo, the company that does not make any money, is going into the NASDAQ starting on the 24th of August. Steady Eddie says, hi, Dustin, do you see the U.S. dollar bouncing back to the 200-day anytime soon? Anytime soon is the real tough part of the question, right? Seeing it bounce back, yes, it's oversold. It's obviously extended. You had gold getting oversold and extended. Those two work in opposite of each other. I like the reversal today. Anytime soon is the tough question. I don't think it happens anytime soon if you define soon as like in the next couple weeks, maybe 2 months or so. I don't see it. I don't see it. Target beat on earnings today, was up considerably. Is it a good time to start a new position on it? I have a problem buying a stock that's run away like that. You could certainly nibble, would be the way they'd say it on TV, but I have a real problem, hey, 13% higher and now I'm supposed to pay for it. I like to let them cool off a little bit if you can have a little patience. Yep. Harry, teachers unions are refusing to open New York schools. Thoughts on the market impact? Probably none. Probably none. Yeah, that's not something the market cares about. Well, what would you look for as to determine a good entry point for a consumer staples sector VDC? I don't use the VDC. I'm more of an XLP guy, which is probably very, very similar. Let's go over here. We'll take a look. VDC. That's the Vanguard one. They're the same, right? One's probably a tick more expensive than the other. So in terms of this pullback here, what you saw today with Coke, Pepsi, Procter & Gamble, things like that, make you believe that there's a chance you can get a steeper pullback to some degree. And the market's just hinting at pulling back as well. So for consumer staples, I'd actually be more patient than normal. It's not a very fast-moving sector, by the way, so it's not like an overnight thing. But if you can get all those stocks to just pull back a little bit, maybe you got something closer to 63, back into the trend a little bit, maybe a touch under 63. So I'd probably be patient on that one just to see if I could get it cheaper, Hey, what would you look for as to determine a good entry point for... Oh, that's the same question. Thoughts on JP Morgan? Well, now you know. We went through the whole financial sector there in terms of breaking the industries down. You know you're participating in one of the weaker areas that has not recovered as much. So really my opinion is less important because now you have the stats and the data on that. I thought it was exciting today when they were the leading sector for the majority of the morning and into the afternoon because we hadn't seen that. But they've been pulling back over the last few days, so because of that, they got a little bit of a snapback today. I think today, the fact that they erased most of their gains is not a good sign if you're looking to buy it like right now or something. Yeah. Hey, Dustin, I know that people flock to gold in times of uncertainty, but gold sold off during March pullback just as much as stocks. Any alternatives if we were feeling bearish? Gold has become more interesting, besides today. Gold was down what was it, down, did it finish higher? Come on. Gold was down at one point today. So gold down 3.6-ish. Looking for that. You could look at consumer staples. You could look at stability of utilities. Not exciting. I'm not giving you the best suggestions here, but I would say gold has become more interesting lately from those traders that are feeling uncertain. Did not feel that way before the virus, and the reason for that is because we did not have the stimulus. We did not have this pounding of the dollar, whereas now we do. So now we have, if things get weaker, you expect more stimulus. If you expect more stimulus, you expect a weaker dollar, which means higher gold. Hope I said that right. Anyways. CME ever going to wake up and join the performance of the rest of the exchanges? I hope so. Yeah, it's a tough one. I know it's trying to claw its way back up there, but nowhere near the rest of the other exchanges. I'll give you that. Yeah, that's a tough one. Yeah, it's trying. What's the downside of selling equity? Seems like a win-win. Not sure the question. Selling equity, meaning selling a portion of your position? I'm not sure what that question is. Thoughts on today's drop on the American Towers, Crown Castle? Yeah. So it was broad. Today is one of those where you say it wasn't news driven and there was one stock that had bad earnings or did something they shouldn't have. It was a broad-based sector move. So just money came out as a whole, a little profit taking there. The strong stocks in that sector were weak and the weak stocks were weak. So just a broad-based pullback with the market there. Could have been index adjustments, things like that. So not anything that you could really glean from one day and say there's something wrong here. Is a young, newer ETF riskier? Well, it can be if there's not enough volume. Volume is the key consideration because if you don't have enough volume, then you have a larger spread between the bid and the offer. That's what you don't want. Unless there's some incentive there or something very unique about it, I would look at the more liquid ETFs just for that ability to get in and out with less slippage. But is it more risky? I mean, there's no way to say it's more risky without knowing what it is, but volume would be the reason I would say it has more risk without knowing anything about the ETF. Yeah. Dustin, you think someone should hold off buying shares of any kind for the moment because of a heavy pullback is soon upon us? Well, you could have said that a month ago. a month before that. You know what I mean? So it's a tough one to say. At any point, you could have said, yeah, this market's going to pull back. So if you assume it's going to be now and you're right, then yeah, of course, you want to hold off a little bit. I don't think this is a market where you need to take large sums of money and make large bets or large investments. I think this is the kind of market where you can say, okay, as we get little pullbacks, I'll put a little money to work, but I don't need to just go diving all in with anything. So I could buy your argument, but you got to participate to some degree. It's just how heavy do you want to get, or how big of a pullback are you looking for? Yeah. Remember, election season, we get more volatile here, so you might just get that. All right, a couple more. We'll get out of the way here. NVIDIA earnings details. They did report, didn't they? Didn't catch it. Let me see if. Oh, no. Let me see if I can just happen to catch something here. I'm using a little different setup here. So they're going to have that 16-cent dividend, which I think is in line there. Record revenues in the second quarter. Gaming strength looking really good there. Beats by 50 cents. Wow. Raises their guidance. So really good. Issue there that I would have is, I mean, of course, it's overbought already in the short term. That's been the hot stock in that category there. So that's a tough one. Obviously, earnings are really good. There was nothing negative to report there. Stock's down about 1%, and I don't think that's a problem. Right? It's already just skyrocketed here, 150 to 500. So the fact that it's pulling back a couple dollars on earnings, I don't think is a problem. I don't see any reason immediately why it'd be a problem or that people should be running away. Good job, NVIDIA. Yeah. All right, one more and we'll wrap it up if there happens to be one. And as I dig through NVIDIA, and we're good to go. Just want to make sure I said the right thing there, because sometimes this is a little off. Yeah, no, good earnings for them. Good job. Looks good. Stock is down $6 after hours. All right, we'll wrap it up there. I appreciate you guys hanging out with us here a little bit today. Hope you learned something. Watch this segment. Really different, really unique today, something that we don't normally do, but I know when I say something over and over again, I just want to address it in a more detailed way. I hope that helped you. If it did, maybe you'll hit the subscribe button, thumbs up button, check us out at Jazz Wealth, join our research site, come by and say hi, probably everything. I know I ask a lot, but thank you for all the support. Enjoy the rest of your day, and we'll see you again tomorrow.